One of the looming questions over all of this, of course, is China in trade, potentially a long-term trade war. There's this, I guess, March 1st or whatever you want to peg the date to as this 90-day window. And many are wondering, could that shake everything up in 2019, much like it shook up a whole lot of things with the market here toward the end of 2018? To Market Watchers Craig Smith and D.R. Barton. So what about that, guys? And I'll start with you, Craig. If there is some sort of major trade movement, could that be potentially the story of the year coming up?
Yeah, I really don't think so, Blake. It may have on the margins a little bit of effect, but that's already baked into the cake at this point. I mean, think about it. The trade talks with China didn't keep us from getting to 26,951 for Pete's sake, so I don't think it has that much of an impact on the market. I think politics right now and the slowdown globally, internationally, is more weighing on the market than currently China.
DR, your take?
Well, I think I might take the other side of that from Craig, because I do believe, I agree with him, that we got to those highs while we were doing all of this trade talk stuff, and then the pullback really didn't have as much to do with that as I think it does the uncertainty, political uncertainty that Craig mentioned in the White House, and of course the Fed pulling away the punch bowl. So I think if we did get some significant movement to make this look more like a longer-term, freer trade agreement, we got some move on intellectual property, and that we could reduce these tariffs and take a bunch of them away, I think that would have a big first-half impact.
Craig, there are some who feel that if you just simply go back to the tariff man tweet from the president, there has been a decline in the market since then, and that has a lot to do with it.
I think that has some to do with it, but I think DR is right, and I'd like to hit on this because I think it's important. I think the issue is what the Fed is doing with the balance sheet. I happen to believe that the Fed is trying to reduce the balance sheet too quickly. They started in July. Just an 8% reduction in the balance sheets costs a 4,000-point sell-off in the Dow. I'm more concerned about what the Fed is doing right now than China. I agree with DR to the extent that if we get a good agreement, it's going to be the story of 2019. He's absolutely right. But I don't think it's going to.
And what would the market look like then if there is some sort of a framework, some sort of, you know, I don't think anyone's expecting, even if there's agreement, some massive multi-page bullet sheet sort of this is what's agreed upon. It would be more so, you know, a few major components, potentially some good feelings on both sides. But if there is an agreement, what do you think the market would look like then?
Well, I think the market will respond favorably. There's no doubt about it. But I just think the market needs a time to consolidate here, Blake. Look, we went up pretty quick. And along the way, I could argue that these lower interest rate environments, artificially low interest rate environments, have created some bubbles along the way. I think those bubbles need to be popped on the way down. And I think it'll be very healthy for the market. I think long-term, the market's looking good. Short-term, I'd be focused, like your reporter talked about, on the currencies right now. Watch the dollar, watch the yuan. That will tell you the whole story going forward.
DR, I'll give you the other side of the coin, the other side of that question. What if there is no deal by March 1st?
Well, with no deal, I think then the market has, over time, and Craig alluded to this, every time we got a tariff, some tariff news, right up until your point, the tariff man tweet, right up until then, every time we got bad news, it would go down 1% or 2% and then pop up on negative tariff news. And that's because I think the market believed that this was just a long-term negotiating strategy by Trump and the administration to get some movement by China. If we don't get that, I think that this bear market turns into a longer term, much more egregious bear market.
Craig, when we get into earnings season here, when we turn the calendar, do you think the market's going to and the economy might hang on every sort of tariff headline or potential interest rate hike, or might we just get into earnings season and things sort of settle off?
Well, it depends upon the company you're talking about. I mean, if you look at international, multinationals, I mean, for example, BMW. I mean, I think Germany's really sputtering right now. I mean, BMW's, their profits were down 24% recently. So If you're talking about domestic companies, I think domestic companies are going to do relatively well in 2019. I'm more concerned about the global slowdown right now. 7 out of the last 10 months, industrial production was down globally. If you look at China, they have the lowest retail sales in 15 years. I mean, I just mentioned BMW. I think we need to be focused on international companies. I think that'll have a big pull on the market overall.
Got to leave it there, guys. Craig Smith, D.R. Barton, thank you both for coming in. Hope you had a Merry Christmas and Happy New Year to you both.
Thanks, Blake.
Speaking of the new year, we're got a couple days left of the trading.